What's up everyone, welcome to a new video. As you know already, in this channel you can find a lot of information about how I trade and some concepts about smart money, which are some concepts that I have inside of my strategy. Now, as I said already in many other videos or on my Instagram, if you follow me already, and if you don't, make sure to go follow me for also daily tips and to actually follow what I'm doing and my entries and my trades and so on. As I say many times, smart money is a great tool. It has some great concepts, but in my opinion, it is not something that makes you profitable. As you know, right now, it is very, very popular. A lot of traders are using smart money, including myself, keep in mind. But still, the 90%, so the majority, 90% of traders, or maybe also 95% of traders, are still losing money, as I say many, many times. And you might wonder why. Why everyone thinks that smart money makes a person profitable, but they still lose money. The reason why is because a system with an edge on the market is missing. Smart money has great concepts. They can be applied, they make you understand how the market moves. But if you don't have a system that is proven to work over time and is proven to give you that extra edge in the market, then it is not enough to actually be profitable. Of course, mindset and psychology plays a huge role, and you might argue that 90% of traders also lose because of that, and I agree that it plays a role inside of the overall 90% of traders, but this is not the only thing. Keep in mind that smart money needs to be contextualized inside of your strategy. With that being said, I hope that you will like this video. Make sure to subscribe, because I will drop 1 or 2 free videos with free education here on my YouTube every single week. And if you want to join my course for some extra education and to actually learn how I trade and to follow my setups and my entries, then the links are here below. I'll see you in the video. What's up everyone? Welcome to this video. We are reviewing the trades from yesterday. We had GBP/USD and EUR/JPY. Let's see. So first of all, GBP/USD right here from yesterday. Let me put the Asian session indicator just to, since it was also based on that. As you can see, overall, GBP/USD was very bearish. We had, first of all, this move that created a break structure to the downside. We retraced to this area right here, and then we dropped. And we already broke this structure right here. Sorry for the noises, I have my windows open. And then also broke this structure right here. Damn, so many noises, sorry. So overall, we were bearish. I still looked for buys. Of course, this is not something I recommend you, especially if you are a beginner trader. But if you are starting to be more advanced, you can also catch some trades against the trend if there is very good confirmation. So we were in here. I woke up before London session and we had Asian range. Asian range is usually manipulated and we usually get a reaction from our key area. Of course, this is not always, but if the pattern is there, then there are good opportunities. Now here we had our pattern that we usually look for. We had Asian range liquidity. So liquidity here. We had previous highs liquidity, which is very important to take into consideration. And we also had this weak liquidity, so internal range liquidity. So 3 types of liquidity. Many people would look for Asian manipulation and look for buys from here. Okay, many people would look for buys from here. This is all liquidity, and we found our key area here. Now, of course, we couldn't be sure that this was a good key area, so we went to lower time frames to check if there was a non-mitigated order block inside this area, and there was. As you can see, this was not mitigated right here.
not mitigated, straight push to the upside. And also this area is good. And why is it good? What did I teach you in the backtesting file that I shared? This order block manipulates, looks like a breaker structure to the downside, manipulates, and then breaks to the upside, okay? So very good order block, strong order block below all of this liquidity. After Asia, I woke up, for me it was 7 a.m. We start pushing to the downside. You can have an aggressive entry. Of course, you know that this is more aggressive and therefore you have higher chances of hitting stop loss. So aggressive entry either from here, or you can take the 50% of the order block. This becomes almost a 1 to 10, 1 to 9, or you wait for confirmation. The only problem with confirmation right here is that if the order block is a smaller time frame order block, then you need the seconds chart to look for confirmation. Again, this is something a little bit, well, it is more advanced, but same concepts that we apply in hard time frames, just a little bit more risky, and we need very good understanding of the market. But anyway, I shared the key area with you. We reach it, as I said already, either pending order. You can execute with aggressive entry pending order from here with a nice 1 to 4, or pending order from 50% of the order block, 1 to 9 restored ratio. Of course, as always, if you execute from 50% of the order block, you have higher chances of missing the trade, but way better restored ratio. If you execute from the beginning, you have less restored ratio, but higher chances of taking the trade. Then went on the seconds time frame, 30 seconds, and we were right here. After this push to the downside, we had this break. After this break, as you can see, we have market structure pushing to the downside and breaking. And keep in mind that at the end of this month, I will share more videos about lower time frames confirmation. Of course, not second time frame. I will more talk about 1 minute, 3 minutes, 5 minutes confirmation, just to give you a clearer understanding of lower time frames. It is already clear with the 2.0 course, but I will give you more examples and more in-depth explanations of what we look for. So stay tuned. Usually, I don't enter right away. I want to see a retracement to enter, but this was the 30 seconds time frame, and I just entered the trade after the break and the closure of this candle. Stop loss below here, 8 pips stop loss, take profit at the next key area. For me, it was a 3.28 restored ratio. You might argue that executing just with a pending order from 50% gives you a way better restored ratio, and that's true. For me personally, I just preferred to see confirmation before taking this trade. I didn't want to take a random loss, even if the restored ratio was way better. And after that confirmation on the 30 seconds, we just had straight rally in few minutes to take profit. Well, few minutes. It was, let's see, was about from 8:20 to, yeah, in an hour, but quick trade 1 to 3.3 restored ratio. So this was good. EuroJPY was more textbook, was more clear, was more as we trade. Usually we have, I sent you the 2 key areas on the Discord. Had this key area right here that breaks structure, but also this key area, which is even better, that manipulates, as you can see, manipulation, break to the downside. Now, first key area, of course, we reached it, and I went to lower timeframes to look for a possible trade. Let me see. Here, perfect. Here. So as you know, as a rule, we never look for a trade unless we touch the area. And here, we didn't touch the area, so we were not looking for a trade. After getting inside the area, I went even on lower timeframes to check better if we had some confirmation. But the bullish continuation just kept going. Went to the upside, failed the area. If we failed the area, I'm not looking for sells anymore. Continuation to the upside, we reached the higher area. we reached the higher area. And again, higher area, I sent in the Discord that I would have taken an aggressive entry. And that was true. I took an aggressive entry because I really liked the area. The area was manipulating and also breaking structure to the downside. I took an aggressive entry just from the beginning of the area. And that was a good choice for me overall. Now, after reaching the area, we just need to look at the overall order flow. We have breakout structure, retracement. Breakout structure, let me show you. No, not here, sorry. We have breakout structure, which is the last demanding control, last demanding control right here. Here it is broken, which is the supply and control. Supply and control is this one. We never reach it. To be honest, we do reach the overall bigger supply. As you know, supply is the last move to the upside before move to the downside. If we go, for example, to the 15 minutes, we can see that that's our, where is it? Wait, here. That's our supply. As you know, this candle, we refine it, supply, and we just break, retrace, possible entry from supply too. And I actually entered another position, stop loss above the wick, and that's it. This was a small trade. Then it just became night. These were trades from New York. And then after New York, actually, which is not really my favorite to enter this late. And then by the time we were down here, it was night already. And I actually closed. I saw this area. I actually closed, even if I was targeting a way bigger restore duration. That's it, actually. Lower time frame confirmation on EuroJPY, lower time frame confirmation on GU, a little bit different based on different things. Just a reminder, if you want to use the Asian range for extra confirmations, I recommend you to use it on major pairs. For example, I wouldn't use it on EuroJPY. I would use it on EURUSD, GBPUSD, AUD, USD, NZD CAD, could be, even if it's not my favorite, but Asian range works best on those. Now, for EuroJPY, I'm not really looking at Asian range that much. Thank you. I hope you enjoyed. Stay tuned because also lower time frames confirmation videos are coming.